people hungry and rising food prices. Food banks across the Bay Area are struggling to provide this year with the escalating prices and the escalating number of families in need.
The reality for us is that we are in a tough situation. So last month, for some of our core food items like green beans and canned tuna, we had to pay $60,000 more than the previous month.
In total, dishing out about $1 million a month to distribute about 4.5 million pounds of food.
We're trying to absorb a lot of those costs so that our families that are in need do not have to pay for that product in that store.
Well, it's making it harder not just for families to put food on their table with inflation 5 to 10% higher in our area for food costs alone.
U.S. consumer prices jumped 6.2% in October, the highest inflation surge in 30 years. At the grocery store, beef is up 20%.
Meats have gone up. Turkeys have gone up. They're like $10 more than they were last year. Maybe even more than that, too. I was thinking maybe I'll just buy a big chicken this year.
Meanwhile, gasoline nearly doubled since last year.
I'm supposed to put super in my car, but with these gas prices, I'm putting regular.
And we're still waiting for things like trucks because of the chip shortage that we've been waiting for over a year.
Aditi Desai works for Food Bank of the Rockies. Hi. One of the hundreds of food banks nationwide battling the same inflation its clients are seeing. Since November of last year, the price of bread has risen 8%, ground beef 15%, and pork by as much as 18%. The numbers might not seem like much, but when you consider the lowest earning Americans spend 36% of their income on food, compared to only 8% among the highest earning Americans, it can add up.
It's ridiculous, and I don't eat the things that I used to eat a lot of times. You know, a lot of things I won't buy because I can't afford it.
Okay.
Feeding America estimates 69% of food bank recipients must choose between food and utilities, 67% between food and transportation, and 57% between food and housing.
And according to the Utah Food Bank, 410,000 Utahns are at risk of missing a meal. They also say 1 in 7 Utah kids is unsure where their next meal will come from. The Utah Food Bank says they distributed 70.2 million pounds of food to people facing hunger across the state last year.
The Virginia Peninsula Food Bank says that these backpack bags have went from $5 to $7 due to the rising food prices and inflation. Now these backpack bags are filled with several canned goods and cereal that school-age kids can take home and eat.
For some people, it's like a slap in the face.
What I would usually pay for groceries, maybe $60.
She says now her groceries are up to $85.
How does that make you feel?
Real bad. I'm really upset, but I have to have it.
Gas prices just keep going.
It's taken a big hit out of my pockets.
Yet again hitting all-time highs.
I travel all across the country for my service engineering job, and so kind of seeing all the rising prices around the country, and then coming to California and seeing the prices that we have here is just absolutely insane.
This will take about $125 at this price. So I just did, what, 50? Get me through the week, half tank.
A pretty hefty price tag for Christina DeLisser, who fills up on diesel fuel, but only what she needs.
I just use it for work and back.
If you live or work in the Inland Empire, chances are you aren't spared.
I drive every day, so I can't really do anything about it, and I wish it was lower, but it's not.
If you live or work in the Inland Empire, chances are you aren't spared. In Riverside, the average has increased by more than $1 compared to last year. San Bernardino also with the same trend. Most people just realizing they're going to have to accept it.
All right.
Today is Wednesday, February 9th, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight, and here it is, in focus. Let's talk about one of your favorite segments of all time. It's called Out of Touch, Out of Mind. And this time around, we're going to talk about oligarch David Rubenstein. You know, I met a lot of people before who got to meet Rubenstein, and they said he's a nice guy, he's very generous, yada, yada, yada. And I have no reason to doubt that. Maybe he's a nice guy, but that doesn't mean that he's not out of touch, out of mind. For example, Rubenstein says, don't worry about inflation. What are you worried about? Inflation is good. Matter of fact, the economy is just fine. Hey, Mr. Rubenstein, you might want to say that to the poor, to the middle class who are suffering right now with this out-of-whack inflation that was induced by the Federal Reserve's cocaine operation of propping up the equities and real estate markets higher to make you and your rich buddies richer. On the other hand, the Fed's cocaine operation made all of us poorer because inflation is an extra and brutal tax on the poor and the middle class. And you know, Mr. Rubenstein is everywhere. He has his hands in too many jars. He's one of those people who secretly control your life. For instance, he's the chairman of the Carlyle Group. He's the chairman of the Kennedy Center for Performance Art. He's the chairman of the National Gallery of Art. He's the chairman of the Council on Foreign Relations. He's the chairman of the Economic Club of Washington, D.C. He was the chairman of Duke University, and he was the chairman of the Smithsonian Institution. He's also on the board of advisory of the Federal Reserve of New York. Mr. Rubenstein is so invasive. Matter of fact, I believe he's stuck in my asshole right now. Hold on, give me a second to pull him out. Here we go. And here, I'll flush him down the toilet for you. You might want to check yours too, by the way. Mr. Rubenstein could be hiding in there. Matter of fact, you want to check your closet, under the couch, under the bed. He's there somewhere, I promise you, one way or the other. He's shaping your life. And of course, a lot of these organizations that Mr. Rubenstein is a chairman of, the likes of the Kennedy Center, the Smithsonian, and the rest of them, you know, they're part of the cult with the satanic rituals. My favorite, by the way, is the human sacrifice. I got to sneak in once, like Tom Cruise. But anyways, look at this. Somehow the Kennedy Center, every time we pass a bailout package, they receive millions and millions and millions of dollars, courtesy of the taxpayer. Likewise, the Smithsonian. Every time we pass a bill, every time we pass a bailout, a so-called emergency package, the Smithsonian gets the score. This time around, billions of dollars for the Latino Museum. Oh, really? Mr. Rubenstein is also close to the White House. Matter of fact, he hosted President Joe Biden during Thanksgiving in his really large and magnificent mansion. But rest assured, Mr. Rubenstein doesn't get any political favors whatsoever from his close-knit relationship with the White House. But here is what Mr. Rubenstein said on CNBC yesterday. I noticed that he remains delusional about inflation as if nothing happened because in his bubble, everything is fine. For the rest of us, it's a different story. Take a listen.
My pleasure, Becky. Thank you for having me.
Why don't we talk about inflation first? We do have CPI data coming this week. It is expected to be very hot. We've been looking at the hottest inflation number since all the way back to 1982. You start to hear about the potential for 7 rate hikes. First of all, is it warranted? And second of all, do you think it'll happen?
Well, this 7 rate hikes would be over this year and next year. Remember, in the 1970s, when I was in government, we had a different situation. Inflation was double-digit. The Fed funds rate went up to 20%. We're not looking at anything like that. The Fed today telegraphs what it does much better than the Fed did in the 1970s under Paul Volcker. It's a different world. I think the market is anticipating that when the FOMC meets in March, middle of March this year, it will increase Fed fund rates by about 25 basis points. 50 basis points is possible. It would depend on the data between now and March 15th or so. But I suspect anything less than 25 basis points, which is to say no rate increase, would be a big shock. Something more than 50 basis points would also be a big shock. But I suspect the Fed will move gingerly each time it meets, probably looking at a quarter point basis point, 25 basis point increase each of the times that it meets this year. It meets another about 6 times this year. It meets 7 times overall. It's already met once. So 6 more times this year it could meet. I suspect it won't increase every one of those meetings. but probably will get something around 25 basis points in the March meeting.
And here it is. Since Rubenstein is in the board of the Federal Reserve of New York, perhaps he's dropping hints for you that the Fed will indeed increase interest rates comes March by 25 basis points, not more than that. So set your trading activities according to what Rubenstein is saying.
Hey, David, no question that this is not what we saw in inflation in the 1970s. We're not looking at anything near that. But when you're talking about 7% increases on CPI, that is pretty significant, and it definitely has an impact. We were just talking earlier this morning about some comments made over in England about how they think workers should stop asking for raises and bosses should be a little more strict in handing out raises to try and cut this cycle of inflation and stop it in its tracks. But that seems a little crazy when you look at the price increases that consumers are dealing with right now, whether that be food, whether that be heat or gas to fill their cars at this point.
And notice how casual they are when they talk about workers or these greedy labor, these greedy bums asking for higher wages. Their bosses should be a little more strict. Crack the whip, no more wages. No, otherwise we're going to have inflation. These monsters blame all of this inflation on greedy workers asking for a better pay, for a living wage. Not the fact that the Federal Reserve and the rest of the central bank cabal printed trillions and trillions and trillions of dollars out of thin air, racking up debt for this country to respond to the so-called emergency. And of course, they cannot let any emergency go to waste. So they greased up the stock market and the real estate market with trillions and trillions and trillions of dollars. You and I know the biggest beneficiary when the stock market or the real estate market goes higher is the rich. Why? Because the rich happens to be the majority owner of the stock and the real estate markets. And when you have all of these trillions of dollars, too much money chasing very few assets, the prices of these assets will blow up higher, and this will cause inflation. So workers, labor, is asking for higher wages to live. They're asking for higher wages so they can afford to, eat. Continuing.
Inflation is here, and it is having an impact, and people on the street feel it.
Inflation's here. It's not double-digit inflation. We think it's probably due more to things relating to COVID because the supply chain got disrupted. Manufacturers started moving things away from producing new products, and ultimately, when the market wanted these products, it wasn't able to produce them. So now the supply chain is coming back to a more normal situation. It may take another year before we get there. So I don't think we have the enormous wage increase that we had in the 1970s that produced inflation. Other things caused inflation in the 1970s as well. Oil price increases were gigantic as well. But right now, I think it's not, I hate to use the word transitory, because that word has probably been damaged a bit.
Yeah.
But I do think that it's likely that we'll get this under control. I don't think it's quite as systemic as we saw in the 1970s.
And here he is, Rubenstein, who's on the board of the Federal Reserve, meaning he's an advisor to the Federal Reserve. He is still beating the drum on the transitory crap. And you wonder why the Federal Reserve is misinformed and Jerome Powell is acting like a fool, even though he knows that his policy is misguided. The reason is Jerome Powell is a puppet, and the puppeteer is guys like Rubenstein. And by the way, Mr. Rubenstein, he doesn't care anymore because he dumped hundreds of millions of dollars worth of stocks. Right at the top, by the way. So what does he care? The problem with these oligarchs is the fact that they live in a different world, completely divorced from any reality. And when they look down from their bubble, down to us, of course, they don't see any problem. I don't see inflation as a problem. What are you talking about? Everything's still cheap. It's not like the 1970s. And how could they not, by the way, these rich assholes? How could they not be out of touch when they're living in a bubble? For example, U.S. billionaires got 62% richer during the pandemic. They're now up $1.8 trillion. This was in the summer 2021. By the end of last year, it was one of the best years for the super billionaires. We're talking about the top 5 billionaires. They gained over $1 trillion. Unbelievable. Elon Musk, his wealth went higher by 75%. Jeff Bezos, poor Bezos, his wealth went higher by only 2%. And you can see the rest of the oligarchs. Zuckerberg, 24%. Larry Ellison, 36%. They're all rolling in cash. They don't feel any problem with the economy. The economy is just fine for them. Inflation is not a problem for them. They don't have to worry about inflation because inflation is good for them. Right, Mr. Rubenstein? And they're about to get a lot richer, by the way. Specifically, their spoiled brat kids. Americans can expect to inherit $72.6 trillion over the next 25 years, but almost half of that wealth will come from the top 1.5%. And by the way, the inheritance is tax-free. They get to pass the trillions down to the kids and the grandkids free of charge. And it's been the roaring 20s for the rich. Boom times. Look at the sales of luxury cars. We're talking about ultra luxury cars like Rolls-Royce, for example. Sales to the moon. These companies, the likes of Rolls-Royce, Bentley, all enjoying the highest profits, the highest revenues in their history. Why? Because the rich is rolling in cash, courtesy of the Fed's cocaine operation, stealing from the future of this country and handing that cash to the rich today. And they spend all of that money in accumulating more wealth, and some of that goes into buying luxury cars. How about the sales of private jets? To the moon. Billionaires are buying private jets. They're flying in private jets all over the place. Business jet takeoffs and landings in the US are up 40% year over year. On the other hand, when you and I travel, we have to be stuck in a little tube, commercial class, like a pack of sardines, with masks on all the time. Meanwhile, these rich, they fly private jets, no masks. Who cares? The rules only apply to us, the bum class. And look at this, by the way. All the virtue signaling by the rich, the oligarchs, you people have to adjust your lifestyle. You need to reduce your emissions. Don't use too much electricity. Buy an EV, yada, yada, yada. Meanwhile, the majority of the emissions from North America come from the top 1%, who are using private jets and yachts. They spend a ton of water watering their lawns. They use whatever electricity they want to use. No restrictions whatsoever. But you have to be ashamed that you're polluting the environment. It's you, not them. How about super yachts? Yep, sails to the moon. Billionaires are scooping up mega yachts all over the place because, sometimes you gotta isolate from the bums. You don't want to live with them, so you gotta have a mega yacht. Once again, it is the roaring 20s for the super rich. It's the best time ever to be part of the super rich in America. And here it is from the New York Times. All of that pumping of the stock market, by the way, who gets to benefit the most? The answer is the top 1%. Sure, the bottom 50% also benefits. The problem is, all of these retail mom and pop morons who are chasing the mania, buying the lottery ticket, they will end up holding the bag. Because the top 1% corporate insiders, the rich, they already dumped at the top, and they're going to leave you holding the bag. So all of that pumping of the stock market, by the way, historically speaking, every single episode of a boom and bust, be it the 1920s, the dot-com, 2006, 2009, or even today, the only one who gets the benefit is the top 1%. The rest of us, we enjoy the ride higher, and then we end up holding the bag. Likewise, all of that pumping by the Fed buying mortgage-backed securities to prop up real estate prices, who does that benefit, by the way? The answer is overwhelmingly the top 1%, aka the rich. Because once again, they benefit from all of these assets going higher. They dump at the top. We, the morons, we chase the mania. We buy at the top of the market. And then what happens? The market crashes on the top of our heads, and the rich gets to scoop all the spoils for a penny on the dollar. And for Mr. Rubenstein and the rest of the oligarchs, yes, in your bubble, everything is fine. Inflation is not a problem. It's actually good. And the economy is just fine. But here's the reality for average folks. The Fed's policy, the tyranny of lower interest rates, punished the poor, the middle class, and savers. For example, if you invested $10,000 in 2007 in the stock market, by June 2021, that $10,000 became $23,250. On the other hand, if you saved the $10,000 in 2007, by June 2021, you're down to $9,529. Now, we know the majority of Americans are not participating in the stock market. And you might say, why? We can solve this wealth inequality problem like Atlanta Fed President suggested, Boystick, by joining the game. If more Americans join the game and gamble in the stock market, we're not going to have wealth inequality. The problem is, every time the public participates in the stock market, it creates a mania. Be it the dot-com bubble in 1990s, be it the real estate bubble in 2006, 2007, or be it the everything bubble right now. Once again, every single bubble, the rich always wins. On the other hand, the mom and pops, the poor, the middle class, they end up holding the bag. These cycles of booms and busts put a sour taste in the mouth of many Americans not to participate in the stock market. When we look at wealth inequality today, globally, not just in this country, the top 10% own 45.5% of the entire wealth in the United States of America. This is on par with oligarchies like Russia and North Korea. Yes, it is a global problem, but the wealth inequality as you can see in the bottom charts, has increased rapidly in the United States versus other countries. Thank you to the Federal Reserve's policy. We will look at the bottom 50%. What do they own in the wealth of the country? In the United States of America, the bottom 50 barely own 1%. Once again, 1% of the entire wealth. Unbelievable. Matter of fact, the wealth inequality in this country is becoming absolutely embarrassing and tragic because the top 10% in the United States of America own more wealth than the top 10% owns in any other country besides South Africa. The top 10% in this country owns more wealth than the top 10% in Russia, in India, in China. This is beyond oligarchy. Don't tell me that this is capitalism, because it's not. This is gangsterism. Yes, we always have disparity between the top 1% and the bottom 50. For example, in Europe, we have disparity between the top 1% and the bottom 50, but it's not as wide as the disparity between the top 1% and the bottom 50 in the United States of America in red. The gap is getting wider and wider and wider. Thank you once again to the Federal Reserve's policy. And the oligarchs like Rubenstein might counter and say, what are you complaining about? Your wages went higher. Aren't you enjoying higher wages? You should be happy. Here's the problem, Mr. Rubenstein. Despite higher wages, inflation gave the average worker a 2.4% pay cut last year. So net-net, despite the wage increases, the majority of workers went down because the pace of growth in inflation is surpassing the pace of growth in wages. Matter of fact, adjusted to inflation, hourly wages are down over 2%. And it gets even worse when we look at the major retailers in the United States of America. Yeah, they're paying higher wages than the minimum wage on paper. The problem is, even with the increase, all of these wages are below the living wage, and this is according to the Brookings Institute, which you, Mr. Rubenstein, is on the board. Or at least a donor, last time I checked. So this is legit information right here. Whether we're talking about McDonald's, Starbucks, Chipotle, Walgreens, Target, Kroger, Walmart, CVS, Best Buy, all of these retailers bumped wages higher. The problem is, even with the bump, these wages remain below the so-called living wage. And the only company that pays slightly above the living wage is Amazon. But as inflation continues to move higher, even the workers at Amazon will be paid below the living wage. This sky-high inflation is evaporating American savings and imposing the cruelest tax on the poor. We have a hunger crisis in this country, matter of fact, worldwide, but even in this country, the richest country in the world, where the oligarchs, the top 5 oligarchs, made over $1 trillion last year alone. Yet we have a hunger crisis in this country. Why? Because food inflation continues to move higher and higher and higher. The American hunger pandemic is getting worse. Millions of people are falling behind into poverty. Children are sleeping hungry, while the oligarchs, well, they say inflation is not a problem. Don't worry about inflation. The economy is just fine. The headline reads, inflation has more Americans counting on food banks to eat. And this is from this year. And it's not just the hunger crisis in this country. We're seeing millions of people becoming under the threat of homelessness as home prices continue to surge out of whack, and most importantly, rents are sky high. And part of the problem, all of these corporations scooping up single-family homes to turn them into rental properties, and this is taking away inventory from average families and prohibiting the so-called American dream of home ownership. According to the CPI, rents are surging across the country. Phoenix, Tampa, all over the place. And they say in San Diego, where I live, rent inflation is about 5%. And I say, really? I can show you properties right now in San Diego, in the shittiest parts of San Diego, where rents are skyrocketing by 20, 25, and even 30%. I'm not making this up, by the way. Here's the headline from the Washington Post. Rents are up more than 30% in some cities, forcing millions to find another place to live. And that place, by the way, is the street, because they're not going to be able to afford rent in this hyperinflation economy that we're in. Forget about the CPI, because the cooks at the Bureau say that rent inflation went higher by about 3% year over year. Are you kidding me? We're seeing rents moving higher by 20, 30, 50, even 100% in certain cases. So once again, the bottom line is we have two Americas here. One America for the oligarchs, where they live in a protected bubble by the Fed and the government, and everything is fine there. Inflation is not a problem. The economy is just fine. everything is great. And then we have another America, where average folks, the poor, the middle class, are suffering by the increase in the cost of living. Next, let's talk about the CPI, and it's a preview for what's about to come. The cooks, of course, are attempting to serve us a cold meal, indicating that inflation is cooling down. Don't worry about anything. Everything is fine. The Fed will not have to tighten anymore. So go ahead and buy stocks. Now, if the cooks try to cook out energy costs out of the CPI, it will be quite laughable and embarrassing. And the reason is, you and I know, looking at the commodities market, that crude oil prices, be it the WTI or Brent, went significantly higher in the month of January. So they're not going to be able to cook that one out. But we have food away from home that could be cooked out. We have used car prices that could be cooked out. And then we have transportation costs that could be cooked out and tamed down. And the excuse would be, well, nothing is moving from ports, therefore the cost of transportation went down. So let's explore all of that, because we're seeing insane inflation in certain cities, the likes of Seattle, for example. This is the highest inflation in 3 decades in the city of Seattle. In Phoenix, it's even worse than that due to home prices, and it goes on and on. But look at this. When we talk about food from home or food away from home, it doesn't matter. Prices continue to go higher and higher and higher. Matter of fact, Tesco over at the UK said, we have yet to see the worst of food inflation, meaning whatever the cooks do, they're not going to be able to cook away food inflation. It will be quite laughable. If you listen to any of these consumer staples companies that reported earnings, be it PepsiCo, be it Mondelez, they're all planning more price hikes, not less. So we know that the cost of food at home will continue to move higher. When we talk about the cost of food away from home, listen to this. The headline reads, inflation is driving every restaurant absolutely crazy and is insane. This is according to ex-McDonald's CEO. And you might have heard the earnings call from Chipotle this week. Chipotle's CEO says, we're going to continue to move prices higher so long as the consumer remains receptive. Whether the consumer remains receptive or not, we have no other choice but to continue to increase prices, because the input prices for us, be it meats, be it flour, be it vegetables, they're all moving higher. So we're going to have to pass that extra cost whether the consumer likes it or not. Another one. Listen to this. The head of the Checkers and Rally's burger chain says the U.S. labor pool appears to have shrunk permanently. And this means that the wage inflation, labor costs for these fast food establishments will continue to move higher and higher and higher. So once again, be it food away from home or food at home, prices are moving higher, and they will continue to move higher. So whatever the cooks do, they're not going to be able to cook away that inflation out of the CPI. What about used car prices, by the way? Because it appears to be a main concern for everyone. Well, the car manufacturers are now blaming the dealers for used cars prices. Not just used, but even new cars. They say the dealers are taking advantage of the customer by hiking prices unwarranted. The problem is, prices are going to move higher either way, because the lunacy of car manufacturers is the following. Now, they want to charge you for all of these features that you and I took for granted when we bought our cars. For example, heating seats, if you want that, that's $5 a month. You want reclining seats, that's $10 a month. You want a moon roof, that's $25 a month. Next thing you know, they're going to charge you a monthly fee for the steering wheel. You want a steering wheel, that's another $5 a month. So again, they can blame the dealers. It can go back and forth. Both of them are taking advantage of this inflation by moving prices higher and higher and higher. Matter of fact, and this is laughable, by the way, used car prices right now are higher than new car prices for certain models. And the reason is there is no inventory. For example, what about the Hyundai Accent? The price for a used car is 11% higher than a new car for this model. How about this one? Subaru Crosstrek. If you get a used one, it's going to cost you almost 12% more than a new one. And the reason is you cannot find a new one. Good luck. Here's another one, Ford Bronco. A used Bronco will cost you almost 16.5% more than a new one. Another one, the Souffle. A used Souffle will cost you 18% more than a new one. How about a Corvette? That's going to cost you over 20% more when you buy a used one versus new one. And here's the top one, Mercedes G-Class, which is an ugly car, by the way, until you drive it, because it will make you feel like an oligarch. The price for that one, a used one, will cost you 35.5% more than a new one. So again, Used car prices may be cooling, who knows? But we're still having a crisis here. Whatever the cooks are gonna do, in reality, the prices of used cars are surpassing new ones. How about transportation costs, by the way? Since nothing is moving from ports, goods are nowhere to be found, the cooks might have leeway with this one. They could say that transportation costs went down. But in reality, they only went down because nobody's using them. There's nothing to move here. Nothing is moving. And I doubt that that's going to happen, by the way. Good luck finding truckers right now. And on top of that, right now, we have the revolution in Ottawa against the cupcake tyrant, and truckers are not moving. Matter of fact, they're blocking the bridge. The flow of commerce between the US and Canada is at a halt right now at certain points. What does that mean? Goods are not moving, shortages are getting exacerbated, and prices will continue to move higher. And this protest, by the way, is morphing into something bigger, where truckers are finally standing up and saying, you know what, it's not about the thing and the restrictions. It's not just about that. It's also about the working conditions that we truckers have to go through. Listen to this headline, for example. Truckers say that they're denied bathrooms on the job, forcing female drivers to take creative measures to relieve themselves. And again, I used to be a trucker. I know for a fact that we had truckers who used to wear a diaper because they're not allowed to stop. And even if they were allowed to stop, there are no truck stops. There are no services. There are no bathrooms. There are no places to eat. So this protest is really important, not just due to the restrictions, but also about truckers' rights, the working conditions that they have to go through. The bottom line is, after all of this, truckers' wages and benefits will go higher. It's inevitable, folks. What does that mean? This is not a transitory inflation. The cost of trucking will go higher, and truckers are the backbone of this economy. If it's going to cost more to transport goods, then prices will go higher across the board. Hence, I keep saying we are in an inflation superstorm, folks. Yet the oligarchs and their Fed puppets say, hey, don't worry about it. Everything is fine. Listen to Atlanta Fed President Boystick, who came out today and said, the U.S. may be on the cusp of inflation slowdown. Oh, really? Is inflation really slowing down? If it does, by the way, is it going to be slowing down for the good reasons or the bad ones? Because that's important, Mr. Boystick. According to your Atlanta Fed, the estimate for the GDP is going lower and lower and lower. So if inflation is going to go down as you're predicting, it's going to go down for the wrong reasons. Meaning, perhaps after the Fed uses an aggressive approach to interest rates, or the economy just flatters. The pace of economic activities and growth drops off the face of the earth. Maybe that will take inflation down. So all of this, folks, is gibberish from the oligarchs and the Fed propagandists. They've been telling us that inflation is transitory, and it turns out it's not. So we take whatever they say with a grain of salt. We'll see what the cooks are going to give us tomorrow in the CPI. But for now, I gotta move on to cover the market for you. We start with the performance of the indices today, and here we go! The Dow Industrial Average in the green by 305.28 points, or a gain of 0.86%. The Nasdaq leading the pack with gains of 295.92 points today, or a gain of 2.08%. The S&P 500 gaining 65.64 points, or 1.45%. What about the sector's performance today? Everything is in the green. We're not going to shame anybody here, but at number 1, capturing the gold medal, technology. Number 2 for the silver, communication services. Number 3 for the bronze, REITs. What about the advance to decline ratios? NYSE 75% advancing versus 23% declining. Nasdaq 72% advancing versus 25% declining. The breadth is a lot better today. The problem is, we're moving higher ahead of the CPI. Not a good move here. What about futures, commodities? Crude oil is rebounding higher. We have gains of almost 1% apiece for both the WTI and Brent. Likewise, we have gains for gasoline and heating oil, while natural gas, the declines continue on milder weather forecast. Softs, look at lumber, moving higher again, blasting almost 4% today. Likewise, coffee, gains of almost 4%, followed by cocoa, sugar, OJ, all in the green, massive gains for softs commodities today. Yet we have an absence from cotton futures, losing a little over 2.5% today. Metals, gold, silver, still stable, not doing anything at all, as if gold and silver saying, we gotta wait here. We cannot move higher or lower until we find out what's going on with the CPI. On the other hand, Dr. Copper is not gonna wait here. Copper moved higher by almost 4% today, and we discussed the reasons behind that in yesterday's video. The supplies are nowhere to be found. Likewise, we have a modest gains for palladium futures. On the other hand, platinum on the flat line. What about meats? Green across the board. Sizable gains for live and feeder cattle futures. But look at this, the new big tech lean hogs. No stop in sight here, folks. Gaining almost 1.5% today alone. What about grains? Green across the board with exception of rough rice. And the gain were led by oats, corn, soybean meal, soybeans, wheat, and canola futures. Now, I want to talk about some herbicide stocks because the prices are moving higher, be it herbicides or pesticides, along with fertilizer prices. Farmers are paying more. What does that mean? You put two and two together, food prices will move higher. In the meantime, we can play some gains here in herbicide stocks. Today, for example, we got earnings from this name, FMC. Again, I'm not invested in this company, and therefore I can talk about it freely. As an individual stock, I don't have to present it as a package when I talk about stocks that I own. I don't own the name, but I'm considering buying it. Look at the earnings that we got today. Revenues for FMC in the fourth quarter were higher by 23% year over year. On the other hand, expenses were higher by only 13%. Once again, revenues are growing at a faster pace than expenses. These are the kind of companies you want to be in right now. All in all, the bottom line, the net income was up a stunning 396% year over year. Now, when we look at the chart, we have a trend line that goes all the way back to 2018. And yes, we had breaches along the way of the trend line, namely the crash of the thing in 2020. But look at that. The stock continued to recover, and it has the behavior of recapturing that trend line over and over again like a magnet. Until we saw the double top, that was a sign to get out. The stock flushed down tremendously to breach below the trend line, and then we saw formation of a double bottom. And now the stock is trading once again above the trend line. A lot of strength here. The fundamentals are good. The technicals are good. Why not consider this name in your portfolio? I certainly will. Moving on to options, the big casino. What's going on here? The hottest table by far is Meta, Facebook. Finally, we have a rebound today. We got a little over 1 million contracts traded for the name today. About 72.5% of those were calls. Number 2, Apple, with about 900,000 contracts traded today. About 67% of those were calls. What about Ford at number 3, with almost 900,000 contracts traded for the name today? About 59% of those were calls. And here's the implied volatility. I want to show you something here. Look at the IV percentage for Meta and Exxon, XOM. This is the IV percentage for today. For Meta, it was 94%. For Exxon, 42%. Why am I showing you this? Here's why. This is the IV percentage from yesterday for both names. Facebook was 96, now it's down to 94. Exxon was 58, now down to 42. You gotta watch the implied volatility for this reason. Trading bottoms and tops. What do I mean? When you have the implied volatility surging higher in one direction, in this case Meta, the implied volatility was moving higher as the name was collapsing. When the implied volatility eases, it's a sign that the stock is bottoming. On the other hand, when you have the implied volatility moving higher, as the stock is also moving higher, in the case of Exxon, when the implied volatility starts to cool and move to the downside, it's a sign that the stock is perhaps stopping. Another example, PayPal. Today, the implied volatility was at 83%. We're talking about the IV percentage, of course. Yesterday, the implied volatility for PayPal was 91. So again, the implied volatility in PayPal was moving higher on the downside. As it starts to cool down, it's a sign that the stock is bottoming. Anyhow, we gotta move on to the unusual activities that took place in the options market today. We start with the ticker F for Ford. The buying calls here, buying the dip, the $20 calls for the expiration date March 11th, with the expectations that the name could rebound higher by more than 9% by then. And they paid about 34 cents apiece to enter this trade, all in all spending about $3 million. What about the ticker PLTR Palantir? It's been a rough ride for the Palantir boys. Unfortunately, they've been listening to pumpers and propagandists on YouTube who probably never even graduated college. I'm not going to name names, but you know who I'm talking about. Palantir to the moon. Palantir is about to pop. Yada, yada, yada. And folks been catching a falling knife all along. But perhaps things will change here because we have somebody buying the $15 calls for the expiration date March 11th, with the expectations that the name could rebound higher by more than 8% by then. They paid about 75 cents apiece to enter this trade, all in all spending about $1.8 million. And what about the trades for the ticker XOP? This is the oil and gas ETF. They're betting to the downside here, buying the 104 puts and selling the 99 puts, all for the expiration date March 4th, with the expectations that the XOP could drop down by more than 5.5% by then, but not more than 10%. They paid about $2.50 a piece in buying the 104 puts, and they received about $1.35 a piece from selling the 99 puts. All in all, they paid about $1.20 a piece to enter this trade, all in all spending about $3 million. What about the trade for the ticker SPY, the S&P 500? Somebody's buying protection here by opening the 380 puts for the expiration date March 11th, with the expectations that the name could drop down by more than 17% by then. They paid about 45 cents a piece to enter this trade, all in all spending about $1 million. And lastly, what about the trade for the ticker LMND Lemonade? What a ride. Down almost 80% or more from the top, but somebody's betting for an upcoming rebound here by buying the 35 calls for the expiration date February 25th, with the expectations that Lemonade could pop higher by more than 13% by then. They paid about $1.70 a piece to enter this trade, all in all spending about $1.7 million. What about the heat map analysis? What's going on here? A sea of green with very few exceptions, namely Exxon in the red today after paying dividends. We'll see a lot of people picking up that name. The dips will be bought 100%. Coca-Cola, similar story here on the heels of PepsiCo's earnings. And then we have CVS, which also reported earnings today. Some weakness in the regional banks, but nothing major here. Pretty much everything is in the green. You place your chips anywhere in the roulette table today and you scored big. But here are some of the notable movers today. Alibaba jumping higher, closing the day with gains of over 3.75%. And the reason is SoftBank denied the garbage news that was reported before that SoftBank is dumping Alibaba. We've been seeing these fake news over and over and over again. Market manipulation efforts all the time. Where is the SEC, you might ask? The SEC remains in a coma. They issue a headline, somebody's buying something, somebody's dumping something to manipulate the stock one way or the other so the option holders can get out. And then they reverse it right away at 180. Another one. You have Pfizer. Now that Pfizer is down and everybody's waking up that it's over for Pfizer. Nobody's going to buy this crap anymore. We're done here. Fool me once, shame on me. Fool me twice, once again, shame on me. Fool me a third time, and I'm going to bite your f***ing ears off like Mike Tyson in 97. And of course, the media is crying right now. Pfizer stock is falling. Did investors misunderstand the revenue guidance? Question mark. Why are you dumping? We gotta make more money here. By the way, get your booster. Anyways, another one, Bristol Myers also moved higher. They're announcing $5 billion in a buyback program. So if you're interested in fake gains in a stock, look no further than Bristol Myers. Another one, we have Toyota, TM, also moved higher slightly today. And here's the news from Toyota. Toyota says they're going to cut production. By the way, they reported earnings in the morning, and they said they're going to cut production due to the chip shortage, but they're keeping the profit outlook. And I say to my landlord, I lost my job, I lost my income, but rest assured, I'm going to pay the rent on time. Trust me. Moving on to the heat map for the ETFs. Everything is in the green once again, besides financials, specifically the KRE for regional banks, which is, by the way, a proxy for the 10-year yield. So what is the market saying here? Is the market predicting that interest rates, meaning the 10-year yield, is going to drop tomorrow after the CPI? Maybe the market is going to read the CPI as topping, and hence interest rates go down. We see regional banks dropping down and the NASDAQ blasting higher, the high beta names. This is what the bulls are hoping for, of course. The problem is, as I shared with you before, inflation is moving to the upside in an alarming way. I don't see how the market is going to brush the CPI as topping, but we'll see. Look at the contrast between value and growth. Again, both in the green, but growth is outperforming value. Understand this. If we see a shock in interest rates due to the CPI, growth will pull back. On the other hand, value, the momentum in value remains intact. Yes, it might be lagging growth right now, but it has been outperforming growth since the beginning of the year. Therefore, I'd rather be in value, not in growth, at least for now. International markets all in the green, led by the RSX, the Russian ETF. We have a lot of hope here that maybe Russia is going to accept the deal. Who knows? We'll see. Let's move on to charts and see what's going on here before we wrap it up. We start with SPY, 30 minutes chart. Again, it was looking good for the bulls, and we discussed the courageous scenario if the bulls are going to take it a notch and close the gap, and indeed they did today. The chart has been battling the resistance of 451 over and over and over and over and over again. It was a solid resistance. One way you can cheat and climb above a tough resistance like 451, is to cheat by gapping higher in the morning. And this is exactly what the chart did. And in doing so, it closed the gap. Again, is this action that we got today bullish or bearish? On face value, it is bullish. The problem is the majority of the buying happened in the pre-market. We did not see a major follow-up during the session, which perhaps indicates that there is a little bit of hesitancy here. Another problem with the move today is, why gap higher ahead of the CPI? Either you already know that the CPI will come out cooler than expectations. Number two, you don't. You're just rolling the dice here. You're assuming that things will happen ahead of time. And this is a dangerous recipe. FOMO has a lot to play here. I don't practice FOMO. I want to see what the CPI looks like. I want to see the bond market reaction before I make a decision. For all you know, they could have trapped a lot of bulls today. The CPI comes out hot tomorrow, and we see a reading over 2% in the 10-year yield. And what do you know? The stock market takes another leg down. For now, the resistance at 459, the support at 454. Another problem with this chart is, look at where the RSI is trading. It is reading overbought territory. Not by a lot, but why do this before the CPI? You want to head to the CPI bruised and abused and injured. So whatever you get, even if the reading is hot, the market will look at it as, okay, it's better than expectations. It's better than the worst case scenario. And the stock market moves higher. But when you hit to the CPI jubilant, you risk the disappointment. The reading will be too hot, and then you don't have the room to say, oh, it's better than the worst case scenario. Anyhow, we're moving on to the daily chart for the continuous contract for the SPY, the S&P 500. The bull flag is playing out. You can see it as a bull flag. You can see it as an ABC pattern. Doesn't matter to me. But for now, the most important number for the bulls remains intact. We're talking about 4,472. But on top of that, the bulls recaptured 4,549.5. The momentum indicators are getting stronger. The volume is stable for now. All of these are good signs for the bulls. The technicals, at least for now, are on the side of the bulls. The problem is, will the fundamentals be on the side of the bulls? Comes the CPI tomorrow. If the chart continues to move higher, in playing out the bull flag pattern or the ABC pattern, we're looking at 4,657 as the next resistance. Moving on to a 30-minute chart for the Qs, the Nasdaq. Again, similar story. The chart has been struggling over and over and over again to break above 360. One way you can cheat that is to gap higher in the morning, and this is exactly what the chart did. The problem is, in doing so, it became overbought, quote-unquote, on the RSI, meaning we're risking a pullback. Not a good setup heading into the CPI. You want to head to the CPI oversold. That would have been nicer if you are in the bullish camp. But now, regardless of all of that, the activities that we got today are bullish because the Qs recaptured 360 as support, 363, and on top of that, 365.5. 3 support lines in a single day. This is bullish, not bearish. The technicals, once again, they're on the side of the bulls. But will the fundamentals be on the same side? We'll see. Here's a daily chart for the continuous contract for the Qs. Again, the magic number, 14,445, remains intact. We're seeing the bull flag pattern playing out. And now the Qs is trading above 15,000, another important level of support. The volume is stable, moving down. The momentum indicators are curling up higher. All of these are good signs for the bulls. If the move continues, we're looking at 15,500 as the next resistance. You can look at it as a bull flag. You can also look at it as an ABC pattern. This is the bullish outlook for the chart. What about a 30-minute chart for the IWM, the Russell 2000 small caps? Once again, a gap higher, 204.5. Was tough. The chart couldn't make it on its own, so we had the cheating in the morning with the gap higher. It did the trick, and now 204.5 is support. and we're looking at 208 for resistance. If the chart loses the support of 204.5, then we're looking at closing the gap. If that doesn't hold, then we're looking down once again at 196.5. Dixie, what's going on here? Consolidating in a bear flag pattern. Yet I'm not placing the bear flag yet because I want to see what the CPI looks like. Because if the CPI comes out hot, then the expectations for more tightening will move higher, and this will be bullish for the US dollar. Now, when we talk about the dollar and gold, the discussion about Turkey becomes really important because the Turkish lira is collapsing. Everybody knows that inflation is sky high in that country. The weakness of the Turkish lira has been a contributor of the rise of the US dollar. But as of late, there has been certain manipulation efforts to push the value of the lira higher, be it by dumping the US dollar in Turkey, and now asking the public to sell their gold and buy the lira instead, which is suicidal, by the way, but yet a huge chunk of the population will do so. And in pushing the lira higher, this will work against the US dollar. And in dumping gold, this will also work against the value of gold. But regardless, for now, the old man is moving higher. It gave it a shot at the Three Amigos. 1,835. It did not work in the first shot. Can gold do it in another shot? We'll see that. But for now, I'm keeping the bear flag until and unless the resistance of 1,835 is broken. What about the chart of the 10-year yield? We got to pull back today due to a hot auction. The problem is the 10-year yield continues to hold on at the support of 1.77, and it really didn't go down by a lot. The momentum remains hot in the chart of the 10-year yield. The only thing that will bring this chart down is a milder CPI reading. Here's a weekly chart for the TLT. Nothing changed here. The assumption for now is we're going to go down to retest 134.5 absent a mild CPI reading, which could push the TLT to recapture 140 as support. What about the VIX? 4 hours chart. The gap is closed. The MACD indicator is showing red impressions on the histogram, and we are now reading below 20. This is a major victory for the bulls and a major defeat for market bears, at least for now. The confirmation of the victory will happen after a weekly closing below 20 for the VIX. Absent of that, who's to say that the VIX is not just reloading before initiating another pop higher? The support of 20 is critically important for the bulls of the VIX and market bears. You gotta keep 20 before the end of the week. Otherwise, the market is going higher. VXN, the VIX for the NASDAQ, we were watching a possibility of a bull flag pattern. That is out of the window now. It's over. It's gone. What are we looking at right now? The bulls would argue, we're talking about market bulls, NASDAQ bulls in specific, they would argue that what we're seeing right now is a head and shoulder formation. Sooner or later, the chart of the VXN will breach below 22.5. For now, this is a major victory for NASDAQ bulls and a major defeat for NASDAQ bears, but it's not over yet. Everything could change by tomorrow. But looking at the charts right now, market bulls have the advantage, no doubt about it. What about a daily chart for Apple? Once again, steady Eddie, a bull flag playing out, no problem with Apple here whatsoever. The support remains 1.72.4. The resistance, let's call it the 3 trillion mark, which is around 182.6. Here it is, Tesla, an hourly chart. Nothing is going on here, just consolidation, gathering energy to do one thing or the other. What do I mean by that? The chart right now is asking any buyers, any buyers, any buyers. If the buyers show up, all of that energy will be released to the upside in a dramatic way. However, if the buyers don't show up, then sooner or later, the sellers will, and the chart will release all of that energy from the consolidation to the downside in an epic fashion. I have a hunch that the implied volatility in Tesla will surge higher in the upcoming weeks. And we have more bad news for the souffle, by the way. They're recalling again. Over 26,000 cars over the windshield defroster. Anyways, but here's the bigger problem. We could see a lawsuit by California against Tesla due to racial discrimination and harassment. And you and I know when these things come out, they pile in. The victims. Now they're silent, nobody's talking, maybe 2 or 3. But once we have a lawsuit, all of a sudden all of these stories will come out. Tesla did this, SpaceX did that, Elon Musk told me this. Yada, yada, yada. One of these revelations could be damaging to the company and the stock. About tulips, BTC, again moving higher, lots of momentum here, even though low volume, but the support of 42,000 remains intact. I'd like to see a retest. I'm not going to buy here until I see a retest of 42,000, and that test holds. Lastly, what about AMC blasting higher? Maybe we're seeing the saucer bottom here, and we're going to run a retest for the resistance at 21. This is a good sign for the apes, but here's the problem, folks. The fantasy of the holy short squeeze, I hope that by now you're convinced that that's not going to happen, because it never will. Your only hope in this stock is that somebody's going to buy the company. Who's going to buy the company? Netflix? Maybe. They're having troubles right now. Amazon? That's another one. Disney, who knows? But your hope right now should be somebody's going to scoop the company. Absent of that, we're going down big, regardless of the retest of 21. And lastly, moving on to the economic calendar tomorrow. What do we have here? We have initial jobless claims, per usual, and then we have the most important one, the CPI, aka the CPI. And the cooks are going to be busy in the morning. Busy doing what? Serving us a cold meal. Because a cold meal means that inflation is cooling down, and hence the Fed doesn't have to be more aggressive. You put 2 and 2 together, and the market will have the biggest orgasm in its history. But if the CPI comes out too hot, the opposite will happen. And lastly, what do we have on the earnings calendar? Tomorrow, we have Coca-Cola, Affirm, Expedia, and Twitter. By the way, Mama Kathy dumped Twitter just a few days ago, so maybe that is a sign that Twitter is going to pop after hours. Who knows? Anyways, folks, I'm done here. This is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.